Welcome to qnawire.
Question 9. There are two companies, Little Kona and Big Brew, and now they have to play this game on this chart. So question A, does either player in this game have a dominant strategy? So dominant strategy means that if I play something, no matter what my opponent plays, that strategy is the best. So we first look from the perspective of Little Kona. So if Big Brew set high price, is it better for Little Kona to enter or don't enter? If they enter, they can make Kona makes 2 million, and if they do not enter, they make 0. So they would choose to enter. Sorry, I need red. So red and I don't know what's wrong. So okay, so they will choose to enter. And if Big Brew set low price, Little Kona loses 1 million by entering and then makes 0 profit by not entering. So they would choose to not enter. And so for Little Kona, there is no dominant strategy because if Big Brew do this, they're going to enter, and then if they do that, they're going to not enter. What about for Big Brew? So for Big Brew, if Little Kona enter the market and then they set high price, they're going to make 3 million. If they set low price, they're going to make 1 million. So if they enter, they had better set high price. And if Little Kona do not enter, Big Brew should also set high price because setting high price earns them 7 million while low price only earns them 2 million. So for Big Brew, there is a best response. Setting high price is always a best response for Big Brew. Okay, question B. Does your answer to part A help you figure out what the other players should do? So for since setting high price is always a best response, is always the dominant strategy for Big Brew. So Little Kona knows that no matter what happens, Big Brew will choose to set high price. So for Little Kona, it is better for them to enter because when they enter, they earn $2 million. Well, when they not enter, they make 0 profit. So this is going to be the Nash equilibrium. Yes, there is only one Nash equilibrium. Okay, so we answer question C. Question D says that Big Brew threatens Little Kona saying that, okay, if you enter, we're going to set low price. So if you choose this row here, we're going to set low price. And do you think Little Kona should believe that threat? Why or why not? They should not believe the threat because they know that the threat made by Big Brew is not logical. It is not aligned with their interest. Because if Little Kona did enter, it is better for Big Brew to set high price. So in this set scenario, we call that this threat saying that, okay, if you enter, we're going to set low price. It is an empty threat because it is never going to happen. Okay, E, if the two firms could collude and agree on how to split the total profits, what outcome would they pick? So if we look at this total graph, we can see that this cell here has the highest sum of profits because 0 plus 7 million is 7 million, right? But then our Nash equilibrium here is just 2 plus 3, so it's total $5 million, which is smaller than 7. So if they can collude, they will say that, okay, Little Kona, you just don't enter, and then let Big Brew sell all the what coffee here or something, and then they set high price and they can earn this amount of money, and at the end of the day they will split the profit, so each of them get 3.5 because 3 and Little Kona will agree on this agreement because 3.5 is greater than 2, and then Brew will also agree on this agreement because 3.5 is also greater than 3. So their collusion here both makes this collusion makes them both better off. So this is how they will this is the outcome they will pick.